In the previous video, I shared the basic process to set up QuickBooks for the Bureau de Change, and I went through to demonstrate how to add the different currencies. And I said something that the currencies of a Bureau de Change are inventory. So, and I also demonstrated how to set up your currencies as inventory and how to track those inventory at your bank balances. So that means you don't have to create another special inventory account because all your currencies are stored in the bank. So indirectly, your bank balances will be serving dual purpose, which is to show you what you have in the bank and as well give you an idea of the value of the inventories you have in store. So in this section, we are going to be discussing the transaction parts of QuickBooks as far as Bureau de Change is concerned, and this is quite straightforward. So the first thing we are going to discuss is how to make order, how to buy currencies. Now, when you're buying currencies from the CBN, it's not um, like normal purchase order that you send to your vendors and then you expect them to deliver to you and then you promise to pay at a later date. Currency exchange is slightly different from that. When you buy, you're expected to make payment immediately, and when you pay, the inventories are supposed to be sent to your account. So let's quickly demonstrate that. So assuming we deal directly with the CBN, we can as well record the purchase of different currencies from the CBN. So when we buy currencies from the CBN, you go to write check. So write check is a window that lets you to make payments. So when you go to write check, the first thing you're supposed to select is the name of the bank from which the payment will be made. So mind you, you're paying with Naira. So from your bank, you're going to select GTB Naira. So GTB Naira will display the bank balance. Now pay to the order of who are you buying the currency from, CBN. So assuming you have other bureau de change that you buy currencies from, you can also add the name here. So let's assume we buy BDC from GT Bank too. So I'll come here, I'll add new. So the GT Bank I'm going to add here is a vendor, not a bank account. So I'll come here, I'll put GT Bank, then I'll click on OK. So we buy currencies from GT Bank. So which of the currencies do we buy from the GT Bank? You come to item. So this item is for inventory, while this other part is for expenses. So we are buying inventory. So you come to item, you click on item, so it will display list of all the currencies that we have. Remember, we sell the euro, we sell pounds, we sell rands and dollar. So assuming we're buying three currencies from the CBN, we're buying the euro, we're buying the rand, and then we're buying US dollar. Now if you want to check the quantity on hand of each of these inventory, you don't have to close this window or go to your report. You can as well click on this square box here, this black square. When you click on it, it will display the quantity you have. You can see we have 50,000 US dollar available, and you can also do the same thing for rand. We have 35,000 rand in store. You can also do the same for euro, and then you see that we have 15,000 euros. So let's say we want to buy 5,000 each, 5,000 euro, 5,000 round, and 5,000 US dollars. So under the quantity, I'm going to 5,000. So which means the quantity I have on hand for each of this inventory should increase by 5,000. So I have 5,000 here. So the cost of each of them is already displayed. So at the point of doing our setup, we already added the cost. Now the cost of each of this currency multiplied by the quantity I am buying. So the cost here is like the exchange rate. So you need to note that. So the cost here is like the exchange rate per unit. So this will give me the total. So if I'm buying 5,000 euro at 390, so I'm going to pay 1.9. If I'm buying 5,000 rands at 35, I'm paying 175. If I buy $5,000 at 365, I'm paying 1.825. So you can put your description being purchase of dollar, euro, so euro, pound, naira, and dollar. So for memo, you can say being the purchase of FX from GT Bank. So you inputted that here, and then once you do that, you can then click on. So the total value of what we are buying is 3.9 million. So you can impute the date of the transaction, and then you click on save and close. Now mind you, if you're buying currencies from the bank, I understand that there are documents that will be involved. You need to fill a form, the bank will need to sign, stamp and all that, and then you have your own copy. Now you can actually scan that copy and attach to this window. So when you go to attach file, look at it. So the attach file here lets you to scan that document and attach to this window. So this will help you to validate this transaction. So this way, it's like a source document supporting this transaction. So when you're done, you click save. So if I click on save and close, the quantity on hand on each of these currencies will increase. Now assuming I'm paying bank charges too on each of these currencies, so I can actually come here and then, so bank service charge. So if the bank is charging me like let's say 150,000 naira on this FX transaction, so 150 plus this amount here will give me total value. I can then click. So if I click on save and close, my bank balance automatically be debited by 4.1 million naira. So I then click on save and close. So if I go to inventory, report inventory, so let's see the quantity on hand each of the currency. If I click on all, so you can see that it has increased. Now if I go to report inventory valuation detail, just to see a brief breakdown. So you can also see from here, I had 15,000 euro plus 5,000, that's 20,000. I didn't buy pounds, I bought rand, 35,000 pounds, rand plus 5,000, so will give me 40,000. You can even see the cost of buying each of these currencies. So I've been able to demonstrate how to buy these currencies into our account, and for buying these currencies into our account, the bank balances too on each of these currencies should also increase. So if I go to use, let's say did you buy euro? Yes, that's 5,000 euro worth of 1.950. You can see it here. So we have 1.950 added to our bank balance. So the value of the euro I have should increase to 7.8 million naira based on my new order. So that's exactly how to post your transaction, especially when you buy new currencies from either the CBN or the bank. Now, when you sell these currencies to other businesses, how do you post that to on the system? Now, if we go back to our customers, you will notice that when we're doing our setup for periodic change, we didn't enter customers. Now, the reason we didn't enter customers is that most of the time for periodic change, you don't sell on credit. Now, some might actually do sell on credit, sell currency on credit, but most of the periodic changes don't sell on credit. They sell by cash. So when you impute the customer, it's when you are actually making that sale. So that's why I didn't impute the sale, so the customers impute the change. But if you have a customer that are owing you, you can go to customer, new customer, and then add the name and the balances. So that's how to add customers. If you have watched the video on retail, manufacturing, or any other video like real estate, you should probably know how to add a customer. But for a build the chain, typically it is when they sell that you see them add the customers that they are selling to. So assuming we have a new customer called ABC Energy. ABC Energy wants to buy US dollar from a bureau de change, from Trust Bureau de Change, which is the company we're using here. How do we post that? Now the question is, are they buying on credit? Are they paying with cash? So whichever they are doing, you be able to post that on the system. So if they bought a currency, if they bought assuming they bought 10,000 US dollars, so you come to invoice. So now the customer, you add new customer. So ABC oil and gas Limited. Click on OK. So what are they buying? They are buying US dollar. So they want to buy 10,000 US dollar. So you input 10,000 US dollar. So description, then the purchase of 10,000 US dollars. At what price? They are we are selling to them at 385. So okay, let's use 390. So 390 times this will give you 3.9. So if you have marketers like sales rep that looks for customers for you, you can also input them here. So sometimes I see some people to change. They have a lot of sales rep, maybe those malam that sell for them, and they pay them commission at the end of the day. So you can also track the name of each of these sales rep. So you can say Malam Kabiru is the name of this person. And then you click on okay. So this sale actually brought in by Malam Kabiru MK, and then terms due on receipts and any other information about this client. So you click on save and close. And if you're also giving the person a receipt for the purchase of this US dollar, you can also attach the receipt by going to attach file. Now since this is a cash sale, perhaps the person is making direct payment, so the easiest way to proceed with this transaction, instead of clicking save and close, is to come here, you click on receive payment, meaning that you want to receive payment on this invoice. So you click on receive payment, yes, yes. So this is 3.9, so we are receiving 3.9 million here. So we receive from 3.9 from this particular person, and then you click on save and close. When you click on save and close, you can then proceed to record deposits. So you click on save and close. So this invoice has been paid for. Then you then move to record deposits. You want to pay the money to the bank. Now, most of the times, I always advise clients to merge record deposit and receive payments together. So the deposit to it goes into our Naira account. Now, why? When you receive payment from in QuickBooks, the money goes to a default account called undeposited funds. So, but because we don't want to use that account, because every money that actually we receive, they are actually deposited into a bank account. So it's better for us to combine record deposits and receive payment together. So that at the point of receiving payment, we can also select the bank where the money was paid. So I'll go to Edit, Preferences, Payments, Company Preferences, then you uncheck, you can see use undeposited fund as a default deposit to account. So we don't want to use undeposited fund. So you click on OK. You click on OK too. Now this is exactly what I've just reflected. So when next we go to receive payment now, on the same receive payment window, you will see that you can click on deposit to, so which was unlike the earlier transaction that we posted. So let's go back to sell rand. So you go to create invoice. Okay, so assuming we're selling to another customer, we're selling to like BDCs travels. Now, this maybe assuming that this is a travel agency that sells dollar back to their clients. So we're selling currency to them. So they are buying South African rand, we select rand, and then they want to buy 7,500 rand at the rate of 45 naira. So you can say being sales of South African rand. So BDCs travel. So let's just say this is a personal travel allowance. So who brought in this sale? Let's say they have another person called Malam Habib. Add other. Okay, that's fine. Like I said, you can also add necessary documents that were signed or that will be used to validate this transaction. Now, if I've added this, assuming there are other currencies too, so it's not necessarily compulsory that sorry, you might probably see me use one currency and you think it's only one currency you can sell on invoice. No, I can also add US dollar too. So if I'm selling US dollar to them, so let's say the quantity we have 45,000 US dollars. So assuming they are buying 25,000 US dollar, so 25,000 US dollars. So we can say being sales of US dollars too, and then we're selling to them at the rate of 425. So you see the value here. So in total, we're supposed to pay 10.9 into our account. So what we do, and you know, this is a sales rep that actually brought in a customer. Then we can then go to receive payments. You click on yes, ignore all. And if they are making part payments, you can all you need to do is post the actual amount they are paying. System will deduct the actual amount paid against the invoice value. Then they have a receivable balance. So here I'm just assuming they are paying in total because really the chain is all about buying and selling of currencies. So and that means you need to collect your cash. So deposits too. So this is the difference between the first invoice and the second one. On the first one, we have to click on record receive payment, and then we'll move to record deposit. But on this one that we have matched receive payment and record deposit, you don't have to go to record deposit again. So you can just select the bank here, GTB Naira account, and then you click on save and close. So there won't be any need for you to go, okay, this invoice has been, you click on save and close. So you don't have to go back to record deposit again to post that deposit. Even if you go to record deposit, you won't see anything because that deposit has been posted. So that's how to make a sale and build the change. Now with what I've posted so far, you can automatically go to your reports, like our profit or loss account, to see a report that shows how our business is doing. You can see sales of rand, sales of US dollar, and you can see the cost of goods sold for each of these rand and US dollar. And you can also see this is the service charge we paid on the purchase of the currency. You can then see your profit or loss as being the change. So as you update your report from the front end, they are automatically posted from the back end. So if you also incur other expenses like normal office expenses, so you need to know whether the expenses is a cash expenses or credit expenses. Why this is very important is because it's not every expenses that we are supposed to treat it the same way. If I probably hire, let me probably look for something to demonstrate that as okay, let's assume we just renovated our office renovation, and we're supposed to pay 3.5 million for that contract. Now after the renovation, we received a bill from the contractor that this is our fee. Now remember, the money has not been paid, we only received a bill from them. The way we post that transaction is different from when cash is immediately paid out. So if it's a credit transaction that will be paid at a later date, all you need to do is to go to enter bill. So enter bill helps you post credit transaction that have taken place, credits that have been incurred but have not been paid for. So as long as you have not paid for that expenses and that service has been rendered, it becomes um an astounding expenses. Now that's totally different from when you pay cash to the vendor. So for every expenses that you have incurred but have not made payment for or that are yet to be paid, you use enter bill. So when you go to enter bill, you then select the name of the vendor. So under this vendor, you can also add a new vendor. You click on add new vendor, and then we can say office design limited. So if this is the name of the company, Office Design Limited, then you click on OK, and then under the account, we are not buying any inventory from them, they only render services. So you can say renovation, or we can, let's say there's any office expenses, office supply, or let's just say office renovation setup expenses. Click on save and close, and then 3.5 million. So you can say being the sum incurred on office renovation. So this is it. Then you click on save and close. Mind you, these expenses is yet to be paid for. We have not paid these expenses, it's been incurred. That's why we're using bill. So if you're going to pay for that expenses, you then go to pay bill. So pay bill will show you a list of all the expenses you are going to pay. Now let's also assume that CBN fined us 350,000 naira maybe for violating one of their rules. You will go to pay bill. Under the vendor, you select CBN, and then you can just say regulatory fine. Enter setup. So regulatory fine. Now this regulatory fine, assuming it's related to the cost of the business, maybe we didn't file our return earlier than expected, so it's going to be treated as a direct cost because it's directly related to your operation. So add regulatory fine of 350,000 naira. So we can say CBN fine for failure to submit annual returns. Then you click on save and close. If I want to pay, I'll go to pay bill. So pay bill will show me list of all the bills. So assuming I want to clear both expenses, I can click on this. Let's assume I'm paying one. I want us to see how it will be reflected in. It will reflect in our profit or loss account. So we're paying from GTB Naira account, and then you click on save and close. Now in accounting, whether an expenses have been paid or not, it should be categorized as expenses. So the expenses that have been incurred, even though we have not paid it, it's going to be treated as an expense. So we should see that in our profit or loss account. So here you can see office renovation, we have it here, regulatory fine of 350,000 naira. So this is how to treat expenses. Now, if it's a cash expenses, you use write check. You will notice that the difference between the enter bill and write check is that on the write check, you have an option to select your bank account. When you go to enter bill, you will not see that. If I go back to enter bill, so you can see that on your enter bill, there's no bank account here. So that tells you that enter bill and the write check are not the same. Enter bill is for credit expenses, while write check is for cash expenses. So any expenses you're making immediate cash payment for, you're going to use write check for it. So that is exactly what you need to know. So if I'm going to make a direct payment to any of my vendor, I can also add new vendors too. Office design, you can see you have a bill. So what this means is that we are here to pay. So if you want to pay a vendor that you are owing and that transaction have been entered via enter bill window, this will come up. So what this is telling us is that the person you want to pay, you already owing the person from an initial entry. Now if this payment is part payment from the amount that you owe that person, you can go to bill. So when you go to bill, it takes you directly to bill, or you can probably go to write check if you want. If the payment is completely different from that transaction, assuming you told the vendor, I want to quickly pay you for these services, but this is not related to the last one you did for us, we're going to pay you for that one. Then you can click on write check. But if it's related to the last bill that you have posted before, you go to pay bill. So automatically it will redirect you to that pay bill window where you will see the amount that is payable to that vendor, just like we have here. And then you click on pay selected bill. So this explains how to write check, how to make payment for expenses. And if you have your petty cash through on the system, go back to your chart of account setup, add your petty cash, and then you can make payment from the petty cash too. So that's all you need to know as far as expenses is concerned. Okay, so another part of the feature of QuickBooks in a BDC is the banking side. So let's look at the banking side. From the banking side, under this banking icon here, you can write check, which is what I've already explained. The use register here is there to help you check bank statements. So if I want to check the statement of each of the accounts that I operate, so you can select the account, click on OK, and then it will show you your bank account register. So you have the date, transaction number, the account, the payee, the memo, the payment, the deposit, and the balance. So if I want to check other accounts to banking, use register, click on this drop down. So you'll be able to select GTB Naira accounts and click on OK. So you can also check all the balances in each of the accounts. Now, assuming you operate multiple Naira accounts and you want to do fund transfer between these accounts, so let's quickly add another Naira account aside from GTB Naira. So you click on chart of accounts, you go to accounts, new, you select your bank, you click on continue. So here we have Zenith Bank Naira. You click on save and close. So assuming we are transferring funds from one bank to another. So let's say we want to fund our Zenith Bank Naira with GTB Naira. So here we have 126 million. We want to transfer 10 million from GTB into Zenith Bank. So you go to banking, you select fund transfer. So with fund transfer, you'll be able to move money from one account to another account. So fund transfer from the GTB Naira to Zenith Naira, so that we don't have any money there. So you enter 10 million. So under the memo, you can say being fund transfer from being fund transfer from GTB to Zenith, and then you click on OK. So if I go back to banking, use register, you can see here this is our Zenith account, 10 million. Let's close this, use register, and then click close this banking, use register. So let's check our GTB Naira account. So you can see this is the previous balance less 10 million. We have 160,912,500. So that's nothing complex in the transaction part of a bureau de change. As long as you know how to sell, receive money, record deposits, or make purchases, buy currencies into your account, you are good to go. So that's a pretty straightforward demonstration of how to use QuickBooks for a bureau de change business.